Liam, it's a great day to have you on. And, you know, we showed that chart because we're trying to highlight how the fact that the options market, especially in, you know, call it 7 or 8 tech names, has just gone nuts in the last couple of months, kind of under the radar. You came on a couple months ago. You kind of talked about this, hinted at it. You've warned your clients about it as well. What do you make of that and where that may ultimately end up?
Well, it's clearly it was signs of speculation. You know, we were building in a fairly large imbalance in the market. It wasn't without reason. It had a fairly good foundation. I think a lot of systematic money was reading the tea leaves the same way, meaning we were having a lot of excess liquidity move into markets. We had a situation where, with a world that's going online, technology was obviously a favored sector by a lot of money managers. And as a result, a lot of money plowed in that direction. And as the momentum picked up, it basically brought with it a feeling that individual investors felt they wanted to get on board. So they were participating largely in the options market. It's a leveraged way to play. And it's a sign of speculation. So the danger in this is that we reached a sort of a peak, if you will, in that speculation at a time when valuations were very high. We had the big growth sector of the market was trading at about 100 times earnings, which was basically 5 times the market multiple, which oddly enough mirrors very closely the 2000 era when we had a peak then. The companies today are much superior companies. However, the market was going to be more sensitive, and I think the adjustment process is now underway as a lot of those option players chase the market up. This is what happens when you do get an inflection point, and I think people should brace for a process that's going to take a little bit of time.
So is that a correction in the overall market, or can the overall market actually go up, Liam, if big tech goes down?
It's not going to work that way, unfortunately. Over the near term, the capitalization weighting of the tech and growth sectors are much larger, and so they'll have a dominant influence on the direction of the index. So the answer to your question is you can expect the index to come down. It's a relative game, however. You'll see probably areas like small cap and even the S&P go down less than, say, the NASDAQ 100, which is dominated by these high valuation, high growth stocks. What we're looking to try to establish, I believe, is some level of equilibrium where all three are satisfied with now this new rebalance of capital, given the circumstance that we have a more concrete timeline to a vaccine. And I think the connecting the dots there, it means that eventually we have a more normal monetary policy, we have less stimulus, we have a more normally functioning economy, and that'll be an economy that's operating still with a limp. Not in a wheelchair, but in a limp.